So if you're feeling a little let down by crypto in 2025, hey, you are definitely not alone. I mean, this was supposed to be the year, right? Instead, what do we get? We got these all-time highs and then a really sharp retreat that left most of the major crypto assets down for the year. But here's the thing. As we start looking ahead to 2026, there's a whole set of powerful new forces gathering, and they are getting ready to completely reshape the entire crypto landscape. And you know who really nailed this feeling? Macro investor Raoul Pal. He captured it perfectly. The mood on crypto Twitter, and I'm quoting here, is unbelievably, miserably, disgustingly washed out. Wow. I mean, that's the kind of feeling you get at a market bottom, not a top, right? It really suggests that while everyone's looking down, the market might just be coiling up for a huge move to the upside. So, the big question is, what could actually spark that move? Well, according to Powell, the single biggest driver for crypto in 2026, it's not going to be some new blockchain innovation. No, it's going to be something much, much bigger. A massive, coordinated flood of global liquidity. In fact, he argues that this liquidity, just cash sloshing around the system, explains something like 90% of Bitcoin's price action. Think about that. Okay, so this liquidity wave, it's expected to build up as central banks and governments get ready to just pump huge amounts of capital into the system. And you can actually track this. You can look at metrics like global M2, which, it's basically just a fancy way of measuring all of the cash and easy to get money in an economy. You also watch for major fiscal stimulus bills and a weaker US dollar. Historically, when the dollar is weaker, it tends to be a huge boost for assets like Bitcoin. Now, for years, Bitcoin has followed this surprisingly predictable rhythm. We all know it, right? It's the 4-year cycle. You get 3 strong years up, usually driven by things like the halving, and then one painful down year where the whole market cracks. It's been the dominant pattern, since the very beginning. And that brings us to the most important question for 2026. Because if you look at that historical pattern, 2026 should be a down year. It should be a pullback. But the real question is, will this crazy, unprecedented wave of global liquidity be a force so powerful that it finally breaks the cycle that has defined Bitcoin for more than a decade? This is the big one. And you can see right here exactly why this cycle might be on the verge of breaking. I mean, look at the old drivers. They're kind of fading out. The impact of the halving, it gets smaller each time. Interest rates, they're expected to fall. And the market has gotten rid of a lot of that crazy leverage. But then, look at the new drivers. We're talking about institutional capital, massive ETF demand, and improving regulatory clarity. These aren't just new forces, guys. These are tidal waves of capital. They're operating on a completely different scale than anything we've ever seen before in the space. So this institutional force, it's creating a really fascinating dynamic. It's a classic textbook supply and demand squeeze. And it's happening right now on a massive scale. Just look at these numbers from Bitwise. They make it crystal clear. Since the spot ETFs launched, they've bought up over 710,000 Bitcoin, okay? Now, in that same exact period, miners only produced about 363,000 new Bitcoin. The demand from just this one new type of investment vehicle is absolutely, it's just dwarfing the new supply that's coming onto the market. Yeah, just let that sink in for a second. The ETFs are buying Bitcoin more than twice as fast as it's even being created. And honestly, this squeeze is probably going to get even tighter. Why? Because 2026 is the year that we expect the big players, we're talking Morgan Stanley, Merrill Lynch, to fully onboard these ETFs for their clients. And that could unlock a whole new, even bigger wave of institutional demand. And all of this new, steady, institutional money, it's also fundamentally changing the very nature of Bitcoin as an asset. You know that old critique, right? Oh, it's too wild, it's too volatile. Well, that argument is getting outdated fast. Bitcoin is, it's maturing. And get this, here's a fact that might actually surprise you. For all of 2025, Bitcoin was actually less volatile than NVIDIA. Yeah, NVIDIA, one of the biggest darlings of the stock market. That is a really powerful data point that just completely challenges that old narrative. And this isn't just a one-off thing either. If you zoom out and look at the bigger picture, you can see Bitcoin's volatility has been on a steady decline for the past decade. The asset is literally de-risking right in front of our eyes as the investor base gets more professional, and a big part of that is thanks to vehicles like the ETFs. You know, this whole supply squeeze thing, it isn't just a crypto story. A really similar dynamic has been playing out in the precious metals market, and it gives us a powerful parallel for what's happening right now. Okay, so silver. It had an incredible run in late 2025. And the reasons why? They're like a mirror image of what we're seeing brew in other places. You had a persistent supply deficit that ran smack into a huge surge in industrial demand for things like solar panels and electric vehicles. Then, on top of that, fears of US tariffs caused a physical squeeze, and all of a sudden, investors started flowing back in. See the pattern? It's the exact same recipe we're seeing with Bitcoin, just not enough supply to meet a powerful new wave of demand. All right, so with all this liquidity flowing in and Bitcoin's whole structure changing, the natural question on everyone's mind is, what about altcoins, right? Are we finally going to get that explosive market-wide alt season that everyone's been waiting for? Well, hold on. This is where Rel Paul comes in again with a big dose of realism. He's basically saying, hey, pump the brakes on the idea that a rising tide is going to lift all boats. It's not that simple anymore. The market structure has changed. All that institutional money flowing in through ETFs, it's super concentrated on Bitcoin and maybe a few other big players. That 2021 style frenzy where, everything just goes up, yeah, that's probably not going to happen. So what does this all mean for you? It means that winning in the altcoin market in 2026 isn't going to be about just buying a random basket of coins and hoping for the best. Nope. Instead, the name of the game is going to be identifying specific, really powerful narratives that can attract capital all on their own, whether the broader market is going up or not. And if you're looking for one of those powerful narratives to watch in 2026, well, you got to look at what's happening on the Ethereum network. The platform is going through this hugely ambitious series of technical upgrades that could totally change what it's capable of doing. I mean, their 2026 roadmap is absolutely packed. In the middle of the year, we've got a key upgrade that's going to enable something called parallel execution, which is basically a fancy way of saying it lets the network do a bunch of things at once to speed everything up. Then later in the year, another big update will boost its censorship resistance. And all through 2026, the network's going to be phasing in this really powerful new ZK rollup technology to help it scale. And the potential impact here, it's just staggering. The whole goal of these upgrades is to boost Ethereum's base layer capacity to 10,000 transactions per second. That's not just a small improvement, folks. That is a monumental leap in scale that could unlock a whole new generation of apps and use cases on the network. Okay, but of course, it's not all sunshine and rainbows. We have to be realistic. There are some pretty significant headwinds and major risks on the horizon that could totally derail this whole bullish outlook for 2026. A huge piece of this puzzle is what happens with US regulation, specifically something called the Clarity Act. Now, this is supposed to create a clear set of rules for crypto. The bull case? It passes, and right now, prediction markets are giving it a 74% chance, and that clarity kicks off a massive bull run. But the bear case is also pretty strong. You've got budget deadlines, the risk of a government shutdown, and all the crazy politics of a midterm election year, all of which could just incentivize politicians to kick the can down the road, leaving the whole industry stuck in limbo. And then there's the elephant in the room, the AI bubble. Look, that incredible run in AI stocks has pulled the entire market higher. But let's be honest, the valuations are getting extremely stretched. You even have Michael Burry, the big short guy, actively betting against AI stocks now. And here's why that matters to us. If that bubble starts to deflate, it could easily drag down all risk assets right along with it. And that includes crypto, no matter how strong its own fundamentals are. Okay, so let's wrap this all up. Here's your 2026 crypto roadmap in 4 key takeaways. Number 1, macro is king. You have to keep your eyes on global liquidity. That's the main driver. Number 2, we are in a brand new era for Bitcoin. That institutional ETF demand is breaking the old 4-year cycle. 3, When it comes to altcoins, you have to be a narrative hunter. It's not about waiting for a rising tide anymore. And finally, number 4, be very aware of the major headwinds. Regulatory uncertainty and the wider market risks could change everything in a heartbeat. So the big question we're all left with is, which of these powerful forces is going to win out?
All right, welcome to The Explainer. Today, we're going to cut through all the hype. Instead, we're going to dig into the massive contradictions sitting right at the heart of crypto, the stuff that's really going to shape where this whole thing is headed.
Okay, so we're going to tackle this in 5 parts. We'll start with the big dream, then get into the paradoxes of trust, anonymity, and transparency, and finally, what this all means for crypto's future. Let's get to it.
All right, first up, the decentralized dream. Let's go back to the beginning. What was the massive idea that got this whole ball rolling in the first place?
Well, the core promise was, honestly, it was pretty radical. The whole idea was to build a brand new financial system, one that gets rid of the middlemen, the banks, the governments, and puts you back in the driver's seat. Total control over your own assets. Sounds amazing, right?
And the magic ingredient to make all that happen? Decentralization. The idea is that control is spread out across a whole network, so no single person or company can just decide to change the rules or freeze your account. It's a beautiful concept, in theory. But as we're about to see, the reality is, well, it's a bit more complicated. Okay, and that brings us straight to our first big paradox. This whole system was designed to be trustless, right? You don't need to trust a bank. But it turns out we humans were kind of hardwired to look for someone to trust.
So think about it. If the whole point of blockchain is that it's trustless, why do most of us, and let's be honest, it's most of us, immediately run to big centralized companies to use it? It's a really interesting contradiction. Research from 2025 actually found this huge disconnect between what people say they want, which is decentralization, and what they actually do, which is pile into these big, centralized platforms.
And honestly, this quote from someone in that study just nails it. They said, even though blockchain is decentralized, I still feel like centralized exchanges are more trustworthy because there's someone accountable. And that's the core of it, isn't it? When things go wrong, when your money's on the line, you want a phone number to call. You want a safety net.
So you end up with this fundamental clash. On one hand, you have the pure ideals of the technology, things like self-custody, no intermediaries, being your own bank. But on the other hand, you have these very real, very human needs, like wanting customer support, a password recovery option, and just the general feeling of security that a company provides.
All right, moving on to our next big paradox, the end of anonymity. And I hate to break it to you, but if you still think of crypto as some anonymous Wild West, well, those days are long gone.
The new reality is this. Your crypto wallet isn't a private vault anymore. It's more like a glass house. And starting in 2026, a whole new system of automated transparency is going to be connecting everything you do on-chain directly to tax authorities all over the world.
And look, this isn't just some theory or a far-off possibility. This is happening. It's like a new operating system for global finance is being installed as we speak. We're talking about 3 massive regulatory frameworks that are about to completely change the game.
Let's just take one of them, CARF. What this means is that countries are now going to automatically share crypto info with each other. So that old strategy of, say, being a US citizen and using an exchange in another country to keep things private, yeah, that's over. The IRS is going to get that data automatically now, no more hiding.
So, what in the world are you supposed to do about this? Well, surviving in this new era isn't about trying to hide anymore. It's all about being incredibly organized. We're talking about auditing your transactions constantly. Using specialized tax software, spreadsheets just won't cut it. And actually planning ahead for your tax bill. The game has totally shifted from evasion to meticulous organization. Okay, which brings us to paradox number 3. And this one is a doozy. We always hear about how blockchain is so transparent, right? A public ledger for everyone to see. But the biggest, most important players in the space, the exchanges, are basically giant black boxes.
Yeah, I'm talking about the big centralized exchanges, like Coinbase or Binance. The official term for them is Virtual Asset Service Providers, or VASPs. For almost everyone, these companies are the front door to the entire crypto world. And here's the massive contradiction. The promise of crypto is this open, public, auditable blockchain. But the reality? Most of the action, the trading, the custody, happens inside these private, opaque companies. And as we all learned the hard way with FTX, trying to figure out if one of these companies is actually financially healthy from the outside, it's next to impossible.
Some researchers actually tried to crack this problem. They looked at a bunch of these VASPs in Austria and did something pretty clever. They compared the assets you could see publicly on the blockchain with the private financial reports the companies filed. And what they found? Well, let's just say things didn't quite add up.
Get this. For one of the major exchanges they looked at, they could only find and verify about 67% of the crypto assets the company claimed to have at the end of 2019. So a third of it was just unaccounted for, on-chain.
But wait, it gets even weirder. Just 1 year later. Because by the end of 2020, the same company suddenly had almost double, 195% of the assets on-chain compared to what it was declaring. This kind of wild swing just screams that there's a massive transparency problem. It makes it practically impossible for you, me, or even regulators to know if an exchange is safe until it's already too late.
So, okay, we've gone through all these paradoxes. Where does this leave us? What does the future of crypto actually look like?
When you put it all together, these three core paradoxes tell a pretty clear story. We have the trust paradox, where we want a safety net in a trustless world. The anonymity paradox, where a private system is now totally under surveillance. And the transparency paradox, where a public ledger is run by private black boxes. What this all shows is that crypto isn't turning into that pure, decentralized dream. It's becoming this weird, complex hybrid, stuck somewhere between the old world of finance and the new one it was supposed to replace.
And that really brings us to the big question, the main takeaway from all of this. We're watching crypto go on this journey from a radical, decentralized dream to a much more regulated, centralized reality. And you have to wonder, as it chases mainstream adoption, is it being forced to give up the very things that made it so revolutionary in the first place? Is the price of going mainstream losing its soul? That's the real question we're left with.